Welcome back to the channel. If you want to file taxes when self-employed, here are the steps you need to follow. Step number 1, you need to determine if you are self-employed. See, in the eyes of the IRS, you are considered self-employed if you work as an independent contractor, you are the sole proprietor of a business, you practice a trade as your business, you work a side gig that is based on your time and you provide the necessary tools to do the work, you are in some way or another in business for yourself, or you receive a Form 1099 NEC or 1099K instead of a W-2. And self-employed individuals, including freelancers, must take their taxes into account when setting their pricing, consider the tax burden in planning their finances for the year, and track their business expenses to deduct them at the end of the year. Okay, so this is really important. And the IRS also classified self-employed individuals as meeting the self-employment criterion if they are a member of a partnership that carries on a trade or business. This is very important. Now, do you need to file a Form 1040 if you are self-employed? Yes, you will need to file 1040, and you also need to include Schedule 1 and Schedule C with your tax returns. There are also other required forms when you are self-employed, such as Schedule 2, Schedule SC for self-employment, Form 4562, and others. And the thing is that your tax ID number for your business is your social security number. That's your primary tax ID number. Now, your business should have a unique employer identification number as well, and you must apply for the number. So basically, you actually apply online. You must complete an online form SS4. This is the EIN application. Okay, it takes about 5 minutes when you fill that form, and you get your EIN right away. I mean, this is really great. And the thing is, remember that there are special rules if you have a husband and wife business team. If you and your spouse are the only member of a business you both operate and work, you can elect to be treated as a qualified joint venture and file 2 Schedules C or 2 Schedules F, splitting all income and expenses. If you use your vehicle for business purposes, you may be able to deduct expenses associated with such use. Remember, to qualify to have the qualified joint venture criterion met, it has to be only you and your spouse, nobody else. You should be the only members of your business team. Okay, very important. Step number 2. So step number 1, you need to determine if you are self-employed. Step number 2, you need to understand the self-employment tax. It's very important. Now, self-employment tax is a tax that's made up of Social Security and Medicare taxes. So if you work for yourself, you pay this self-employment tax in lieu of having a company withhold Social Security and Medicare taxes from your paycheck. So the self-employment tax rate is 15.3%, and it breaks down into the two aforementioned parts. So you have 12.4% for Social Security and 2.9% for Medicare. So when you add 12.4% when you add 12.4% and 2.9%, you have 15.3%. And self-employed individuals pay the 12.4% on the first $142,800 of their net income this year, okay, and 2.9% for Medicare on all of their net income, whether a taxpayer makes $142,800 or more. Okay, very important. So if that seems like an eye-popping amount of self-employment tax, keep in mind that if you work for a company and have Social Security tax withheld, your employer is paying a portion of that tax on your behalf. So because you are the employer and the employee as a self-employed person, you are paying both portions of the Social Security tax and both portions of the Medicare tax. This is very important to keep in mind. Okay, and the thing is that you also have to remember, if you have had a loss or just a little bit of income from self-employment for the year, there are 2 optional methods to calculate net earnings in the IRS Schedule SE. So this is really important. So overall, I want you to really think that so the self-employment tax, 15.3%, very important. Don't you actually? So you have to, and this is kind of important to know, because if you're working for yourself, you want to constantly save. Because come tax time, you will have to actually pay that amount, among other amounts. Okay, and remember. So step number 1, determine if you're self-employed. Step number 2, understand the self-employment tax. One thing I want to say here is that if you don't receive a W-2, but you'll receive a Form 1099, This is a great clue that you may need to pay a self-employment tax. Okay, employees receive a W-2 form and use that information on that form to report their income to the IRS. But if you are working for yourself in a full-time or part-time capacity, and you receive forms 1099, it can be NEC, it can be MIS, it can be K, then you have to pay self-employment. Step number 3, boss, I just want to remind you that today's topic, we're speaking about how to file taxes when self-employed. Step number 3, you need to know what to write off. In other words, you need to know what you can deduct from your side job or self-employment income. This is important, okay? Now, there is a large constellation of expenses that you can write off. But again, the whole thing is you have to make sure that you have the receipts to back those expenses off. Don't you just write something up because you're trying to reduce your tax obligation. This is a crime. You really want to have proof that everything you're writing off can be actually substantiated if the IRS were to look into your records. Okay, there are many expenses you can deduct from your business. If you use your vehicle for business purposes, you may be able to deduct expenses associated with such use. You may choose the actual expense method or use the standard mileage rate. If you choose the actual expense method, you must also keep track of your vehicle-related expenses for the year. Okay, so this includes things like gas, oil, insurance, repairs, cleaning, and registration. The business portion of your personal property tax and vehicle loan interest is also deductible. So whichever method you choose, you must keep track of the mileage on your car from the first day of the year or the first day you use your car for business through the end of the year. Very important. You can deduct your employees' wages and salaries, okay, if they are paid during the tax year for work directly related to your business and the pay is reasonable. Very important, okay. Advertising expenses, things like business cards, billboards, car wraps, ad agencies. You have office supplies you purchase to operate your business, rent paid for equipment, storage, or office space, banking fees, credit card, debit card fees, legal fees associated with your business. You have professional fees such as bookkeeping, taxes, accounting, and whatnot, cleaning and maintenance. Okay, we're speaking about repairs like having a plumber fix a leaky faucet, membership dues paid to a chamber of commerce, for example, local small business association or trade groups, publications and books on the business or for the business like magazines in a waiting room, storage, and other expenses that are common to your business. Okay, this is important. Now, costs incurred when setting up an active trade or business, investigating the possibility of creating or acquiring a business, and some legal fees, those are deductible. Yes, so you can deduct up to $5,000 of business startup costs now and claim a deduction of the remaining cost over 15 years. Okay, franchise fees, goodwill, and customer-based intangibles are also amortizable. Very important. Next, boss, I want you to collect your paperwork. See, if you have to file taxes when self-employed, it's important that you have the right paperwork. If you decide to file self-employment taxes for yourself or are gathering paperwork for your accountant, you will need the following forms. So you have Form 1040. So this is also known as your U.S. individual income tax return. Everybody knows that form. Next, you have your Schedule C, which has your profit or loss from your business. Okay, everybody knows that too. Now, you use Schedule F specifically if you are a farmer. Okay, so if you're not, then you don't use Schedule F. Then you have Schedule SE, which helps you calculate your self-employment tax. It's important. And you have the 1099 forms. So you may only have one if you have one client, or you may have numerous 1099s, which should all arrive through the mail by early February. So end of January, early February, that's when you receive your forms 1099. And you will either receive one of several 1099 NEC and perhaps a 1099K. And you may be accustomed to receiving 1099 miscellaneous forms, but those days are probably over. So the MIS stood for miscellaneous income, and the NEC is actually an abbreviation for non-employee compensation. So, Betty, if your business received certain monetary funds like legal settlements or prize money from a company, you may receive a 1099 MIS, okay? And a 1099K, which you should receive in the mail if you use a service that processes credit or debit card transactions, and it has processed at least $20,000 worth of payments and at least 200 transactions for you in the previous years, this is really what it is. They will send you a 1099-K. Okay, and the thing is that, having said that, some PSEs, payment settlement entities, they will send 1099-Ks no matter how many payments they process for you. For example, you have PayPal that does that all the time. You also have Fiverr. Now, one thing I want to say here is that whether or not you receive a 1099-K or 1099 MIS or 1099 NEC from your provider, you still have to pay taxes on your income. If you acknowledge that you have received income, you have to proactively pay taxes. Why? Because sooner or later, the IRS will catch up. And if they do catch up and realize that you haven't paid your taxes, you may be in big trouble. So always be on the good side of the law and just abide by your taxpayer obligations and pay your taxes, regardless of whether or not you have the actual paperwork to prove it. Step number 5, boss. I want you to calculate your taxes. Now, the thing here is that if you don't want to use tax preparation software or hire a tax professional, you can calculate your self-employment taxes by hand. And once you have your numbers, it is just a simple division to come up with a dollar amount to send to the IRS. Now, first, what you want to do is, and I think it's a lot easier to do this in an Excel spreadsheet, okay? I want you to open right now an Excel file, and what you want to do is you want to add up all of the income that you earned last year. So basically, where do you find that number? Well, those can be on your Form 1099 NEC and maybe a 1099-K or a 1099 miscellaneous form. So those are the 3 areas where you actually go to retrieve whatever aggregate income you received last year. Then what you want to do is you want to subtract your business expenses. Okay, remember, everything must be necessary and ordinary. In other words, you basically spend money on the business, and this is actually ordinary for the kind of trade you are in. So typically, 92.35% of your net earnings from self-employment is subject to self-employment tax. Okay, and to make sure you are on the right track, you may want to check out the IRS. You just go to the IRS website and look for Schedule SE. Now, having said that, we have actually committed an entire show or 2 shows to Schedule SE. So if you have questions, please just let us know in the comments below, and we'll certainly answer you, or we'll just direct you to the actual video about Schedule SE. Okay, and the thing is that Schedule SE help you figure out the tax due on your net earnings from self-employment. So you will then, so once you actually take the 92.35, you'll then apply that 15.3% tax rate to the amount subject to the self-employment tax. Okay, so basically, number 1, you add up all of your income, you actually subtract your business expenses, and then basically the number that you have, you multiply that by 92.35. Okay, and then you basically apply the 15.3% tax rate. So after that, you divide the number by 4 to arrive at the amount that you should pay the IRS every quarter. Okay, every quarter you need to send your estimated taxes. Now, there are a number of self-employment tax calculators on the internet, okay? And again, if you basically need help, just let us know. So decision time, boss, big decision time. Are you able to calculate your taxes right now? And are you going to file manually this year, or are you going to use the tax software? And what is your strategy in terms of sending out quarterly tax payments to the IRS? Just talk to me about that. You can answer in the comment section below. Not a problem. Speaking about quarterly taxes, that's step number 6, really. I want you to really have a clear idea of what we talk about when we mention quarterly taxes. If you are self-employed, you are required to actually pay quarterly taxes, okay? And the thing is that the IRS website states that as a self-employed individual, generally you are required to file an annual return and pay estimated tax quarterly, okay? Now, however, there are some exceptions. If you believe you will make less than $1,000 in a given year through your self-employment, you don't have to pay quarterly estimated taxes. This may be the case if you started working for yourself in December, or you are working for yourself in a part-time capacity that's not yet bringing in significant earnings. Okay, so this is kind of important. And one thing I want to say also is that it's important though, failing to make quarterly estimated payments can result in a penalty for underpayment when you file your tax return. In addition, if you wait until you file your taxes in April, you may have a hefty tax bill and possibly one that you cannot pay all at once. So it's really a smart way to stay on top of things and make those estimated payments on a quarterly basis. And for most states this year, those estimated tax payments will be made around January 15th, April 15, June 15, and September 15, based on your profits for that quarter. And if the deadline falls on a weekend or holiday, you pay the next business day. Okay. And so as an individual, you also have the option to sign up for and use the electronic federal tax payment system and pay taxes monthly if that's easier for you. So the IRS gives you options here, okay? And the thing is that if you expect to make quarterly estimated tax payments, use Form 1040 ES that I spoke about earlier, which contains a worksheet similar to Form 1040. Keep your return. You will need the prior year's return to fill out Form 1040 ES. Very important. And the thing is that when we speak about your annual return, now if you file your annual return, you will need to report your income or loss from a business you operated or a profession you practiced as a sole proprietor. To report your Social Security and Medicare taxes, you must file Schedule SE, Form 1040, Self-Employment Tax. This is important. So overall, you got to know about quarterly taxes if you want to be on the right side of the law. The last step here, you need to file your return, okay? So to file your taxes with the IRS by April 15th of this year, you want to take the following steps. So decide whether to hire a tax professional. If you're self-employed and you don't have a complicated tax return, you can just do things yourself. I mean, no need to waste money trying to have an expert. But if you have a complicated tax return, if you have, let's say you have your family situation is complex, your business situations are complex, you are involved in multiple businesses, or you just want to have peace of mind having like an expert take care of your paperwork, then you can hire a tax professional. Please make sure that you collect your paperwork. File your taxes or send them to a professional and plan for next year's self-employment tax. Okay. Now, when we talk about hiring a tax professional, again, everything is all about your resources versus your opportunity cost. Do you have time? Do you want to do it yourself? Are you a DIY person, or you would rather have someone to take care of it? How complex are your returns? So those are important elements to take into account when choosing whether or not you should hire a tax professional, okay? And again, if you choose to have a tax professional, then you send the person your taxes in advance. That's really important because that's going to make sure that the expert has all the elements that he or she needs to do your taxes. When we speak about a tax professional, you can just have a random tax preparer, yeah, not a problem. But if you want expertise, if you want knowledge, if you want tax acumen, you want to go for a tax attorney, you want to go for an enrolled agent, or you want to go for a CPA, a certified public accountant. So those three designations are recognized by the IRS when it comes to discussing very important matters, okay? But again, I'm not saying that your tax preparer should have that designation. No, it doesn't have. He or she doesn't have to. It's totally optional. It depends on the kind of sophistication, quote unquote, sophistication that you need from an expert, okay? And also make sure that you plan for next year's self-employment tax. Do yourself a favor and start preparing for your self-employment tax next year. You want to do it now for next year. In other words, make sure that you pay your quarterly self-employment taxes this year, okay? And the thing is, it's always important to have a calendar. You have reminders on your professional calendar, so you have a clear idea when you should send the IRS your quarterly tax checks. Let me give you a bonus. If you have actually made it so far, I want to reward you, and I want to say here. Now, the thing here is that there was a big question that actually came not long ago to us, and one of our viewers asked, do you pay self-employment tax on passive income? I mean, the short answer is no. Basically, if your passive income is defined as such by the IRS, then it is not subject to the self-employment tax, although it will likely be subject to income tax, but not self-employment tax, okay? So there are two types of passive income according to the IRS. The first is a trade or business you do not actively participate in during the year. If you own or partially own a business that operates independently from you, then it is passive income. Okay, so that's the first type. The second type is rental activities. So rental activities if you're not a real estate professional. So you can actively participate in these activities and not be charged self-employment tax. The only thing is you should not be a real estate professional. Okay, and so what kind of jobs are really exempt for paying the self-employment tax? Well, any job that pays less than $400 a year is exempt. And that is true regardless of the type of work done. A major exception applies to clergy who are employed by a congregation. So their entire income is exempt from self-employment tax. If a clergy member is paid by a church organization and not directly by the congregation, that exemption might not apply. Okay, and the thing is that people always think, well, if I'm self-employed, I'm paying higher taxes. That's not always true. No, it depends. It's true that on average, self-employed people do pay higher taxes because you actually are paying the self-employment portion that the company should have paid for you if you were employed by an organization. Okay, so the on-paper tax rate is higher because of the self-employment tax. So that is a consideration that is important for anyone considering self-employment. That said, there are circumstances that can lead to self-employed people paying lower effective taxes. So for the most part, this applies to business owners. So if you own a business, if you own your business, you have access to tax breaks and write-offs. Okay, so when leveraged correctly, those additional tax benefits can make up for the higher self-employment tax and lead to a lower total effective tax rate. So those are considerations you need to think about. Thank you so much for your attention. I really appreciate it. I was just talking to you today about how to file taxes when self-employed. So we spoke about determining if you are self-employed, understanding the self-employment tax, knowing what you write off, collecting your paperwork, calculating your taxes, knowing about quarterly taxes, and filing your return. Thank you so much for your attention. I really appreciate it. I'll speak to you another time. Until then, remember, stay marvelous.